Good day, everyone. We are the Group 2 presenters, and the topic that we're going to discuss today is all about insurance and risk management. Understanding the fundamentals of risk is crucial for both individuals and businesses. Risk refers to the possibility of an adverse event occurring that could cause financial loss, harm, or damage. It can stem from various sources such as accidents, natural disasters, health issues, or business operations. For individuals, risk may include health problems, accident, or property damage. This risk can have significant financial implications, impacting personal savings, assets, and overall financial stability. And for businesses, risk can be more complex, involving property damage, liability issues, worker-related accidents, and professional errors. Managing this risk is vital for maintaining operational continuity and financial health.
Type of insurance and the key function. Here the number 1. Life insurance is that provides the financial protection to beneficiaries into the event of the policyholder death. And here the benefits: financial protection for dependent and income replacement, debt repayment, funeral expenses, coverage, tax-free out, supplementary retirement income, estate planning, and peace of mind. Number 2 is health insurance. Coverage medical expenses for the illnesses, injury to the preventive care. It helps to reduce the financial burden of the healthcare cost. The benefits is the financial protection, preventive care, comprehensive coverage, cashless and hospitalization, mental health coverage, tax benefits, and coverage for critical illnesses. Number 3 is property insurance. Protection of physical assets such as a home, car, or businesses from the damage or loss due to the wildlife, fire, or natural disaster. The benefits is protection against loss of damage, coverage for liability, business and community of mortgage retirement, peace of mind, natural disaster coverage, income, rental income protection, and cost-effective protection.
Evaluating insurance needs. Insurance is a financial protection a plan that helps individuals and businesses manage risk and uncertainties. So first, the adequate coverage means having enough insurance to protect against the risk you face. So for example, si Juan, at 35-year-old father, gets a 2.5 million pesos life insurance policy to cover funeral expenses 200,000, outstanding debts 500,000, and education fund 1.8 million, total of 2.5 million pesos life insurance. Financial security, having enough money to cover expenses, emergencies, and retirement. So for example, Maria, 40-year-old entrepreneur, avails of 500,000 pesos business interruption insurance to cover property damage, 200,000, loss of income 150,000, and employee salaries 150,000. The cost effectiveness. Cost effectiveness is a kind of method to compare the cost and effectiveness of different options like healthcare to determine which one is best. So for example, Brian, a 30-year-old professional, chooses a 1.5 million term life insurance policy with lower premiums, 15,000 per year instead of whole life insurance nga 30,000 per year. Next is the risk management. Risk management is the process of identifying, assessing, and reducing the likelihood of adverse events and using insurance to help reduce the financial impact of those events. So, for example, risk management, for example, Anna, a 45-year-old homeowner, avails of a 500,000 flood insurance policy to cover the damage to property ng 300,000, temporary relocation 100,000, and loss of belongings 100,000. Adapting to changing circumstances. So, adapting to changing circumstances is updating the insurance coverage as life circumstances change. For example, as father si Mark, when he became a father, is gi-increase niya iyang life insurance from 1 million to 2 million due to the changing of circumstances. Next is the peace of mind. So, knowing that you are secured sa kaning mga life insurance, your home insurance, is maka-feel ka og kind of peace of mind. So, peace of mind refers to the feeling of tranquility and calm that comes from knowing that you have financial protection from unforeseen events. So, either medical bills, car damage, home damage, or debt, liabilities, and other. So, by having a financial safety net, you can worry less about unexpected events and focus on your loved ones, your career, and your personal goals.
Dependents. Dependents are individual or early in your financially, such as spouses, children, or elderly parents. The more dependents you have, the higher your life insurance will likely be, and why it matters. Insurance will help provide financially support of your dependents that can ensure that can maintain their standard of living or meet essential expense. And second is income replacement. Income replacement is life insurance will help replace your income so that your family can cover ongoing living expense like house, food, utilities, and transportation. And why it matters. If you are a primary breadwinner of your family, may struggle financially without your income. So pay out to cover your income for a set a number of years, leaving your family adjust. And the third is debts. Debts is you have as such a mortgage, car loans, and credit balance. Avoid of burning your family with this financially obligation. And why it matters. Can ensure that these debts are paid and preventing them from being passed to your loved ones. And fourth is funeral costs. Funeral costs can be expensive with costs running from your several thousands of tens of thousands of dollars. Essential to have accounts of those expenses in your life insurance coverage. And why it matters. Funeral costs in your life insurance ensure your family does not need to pay out of pocket of this final expense, which can reduce the stress during already difficult time. And the last is future financial obligation. Consider any future expenses like your children's education or major life event, such a wedding that your family will have still want to pursue after your death. Why it matters? Life insurance can provide the funds needs to ensure your children's education or other significant expense are covered allow them to pursue opportunities you have to support them. Thank you.
Hello everyone, this is my topic. Step to evaluate insurance need effectively. There are three three steps to evaluate insurance need effectively. So first is identifying risks and liabilities. So assess personal or business risk. Begin by identifying potential risks and liabilities specific to your situation for individual. For the individual, this might include health risk, property damage, or personal liability. For business, consider risk related property, operation, employee safety, and customer interaction. So, and then second is analyze current coverage. So review your existing insurance policies to determine what risks are covered and where there might be gaps. This includes evaluating the adequacy of coverage for life, health, and property insurance. So consult with professionals. So engage with insurance advisor or broker who can help identify additional risks or liabilities you may not have considered. They can provide insult based on industry standard and your specific needs. And the second is determine the right coverage amount. So the first of determine the right coverage amount is calculate coverage needs. So use risk assessment to determine the amount of coverage required for life insurance. So consider factor like income replacement and dependent and debts. For health insurance, evaluate potential medical costs and deductibles, co-pays, and out-of-pocket maximum. For property insurance, assess the value of property and belongings and the potential cost of liabilities. So review insurance options. So compare different insurance policies to find those that provide the coverage amount needed. Consider factor like premium, deductibles, coverage limits, and exclusion. So balance cost on coverage is ensure the coverage amount aligns with your financial situation and risk exposure. Avoid over coverage, which can be costly, and under coverage, which can leave you exposed to significant risk. So review your policy regularly. So first is update information. So periodically review the update your insurance policies to reflect change in your personal or business circumstance. Major life events such as marriage, the birth of child, or significant purchase may reasonable adjustment and coverage. So assess policy performance. Check if your policy are still competitive in terms of coverage and cost. Compare your current policies with new option of the market to ensure you're getting the best value. So adjust coverage as needed. Make change to your coverage based on update risk assessment, the changing needs. For example, insured life insurance coverage after having a child, or adjust property insurance after significant home renovation.